Okay, so we're recording, screen sharing, we're good. Okay, so I'm going to go over the questions that I got first. Um, why won't this thing scroll? If you have any questions while I'm going over this, just interrupt. I don't mind at all. Okay, so the question is, the first one was, why don't I trade 10 minutes before and 5 minutes after the hour? The reason I don't is typically, you'll see, let me see if I can find one. Typically when you have like a really good setup, like 3 lines of confluence, like we have a round number here, 100 FIBO level here, daily support here, and a Murray math line here, and this is, let's pretend this is the end of the hour candle, plus it's monthly high, weekly high, daily high. We have confirm and value charts is pushing. Now what would happen is you'd say, yay, great trade, and you get in at the end of the hour and it just pushes straight through it. You see it more often doing that at the end of the hour. So you can adjust that indicator that I gave you. And if we go into the indicator, it's changed background color. You can make this 5 minutes before, which will be safe, but for me 10 minutes before, because I jump over and review my Forex. I have hourly charts up for Forex. So 10 minutes gives me 10 minutes before the end of the hour to see if there's anything. I trade ICHI on the hourly basis, and that means that I only take trades when the candle has closed. So for me, it works out perfect, and it's a way of alerting myself. If you're not doing that, you could change this to 5 minutes and 5 minutes. As long as you're not in that candle that closes on the hour and opens on the hour, it'll help you avoid some of those times when you're like, and putting it bluntly, you're like, why the fuck didn't that work? Probably the end of the hour and they're pushing price. So that was question one. The second one, also for ICHI. With ICHI, does one wait for candle to close for the same as TA for entry? No. Let's see if we can find a quick ICHI sample real quick. Here, let me get my charts in order. Sorry, I have to click on my charts and it backwards for my hotkey to work forwards. There's a shit ton of them here, so let's just zoom in. These are not good trades because the market's ranging here. But see the purple line here? I always want to get entry other than underneath the purple line when I am doing an ICHI style TA pullback trade. Let's see if we have any pullbacks. Okay, so we almost had one here. The reason I say almost is it would have been almost. I would have tried to take entry down here. We had an hourly support, and it hit the purple, which is Mr. Krabs, or God, I don't even remember the right names anymore. Give me a second. Okay, so my entry is not the same as TA. My entry when I'm doing ICHI pullbacks is below my confluence zone. So if I can get in below my confluence zone, that's what I'm shooting for. Now that gets tricky sometimes because if you get in below your confluence zone, you might have to cheat or get it very early because a lot of times when it hits those levels, it just immediately pops back up and out of them. So for ICHI type pullback trades, and that means that the cloud's green and up, that's the first rule we want. Second rule we want is price to pull back down to Mr. Krabs, which is the purple line, and we want it to have one more confluence reason. Then we can get into those type of trades. What do I mean by bell? The bell is the U.S. bell. It opens at 9:30, well 8:30 Eastern time. So 10 minutes ago the bell rang. When the bell rings, a lot of times what you'll see is a change in sentiment over the markets. Like, let's see, this was 20 minutes ago, 5, 10, 15, 20. So price was kind of ranging and dropped. We didn't see anything major. But as you can see, consolidating, then when the bell opens, it drops. So I stay out of the bell just because you'll see sentiment change. What I mean is the U.S. traders come in, and if the U.S. was being pushed down all of London, they might start pushing back. So going in, trading when the bell opens is dangerous. Just, it is, because the U.S. traders might decide they want to push the price the opposite direction, and they will ignore levels to get it where they want it. Remember, guys, all Forex is orders, and all it is currency exchange. So if a big bank says, I don't know, this is the example I use, iPhone 7 comes out, in Australia they sell $7 billion worth of it, and the U.S. says, send us our money. they are going to push price to just the bank that's moving it is going to try and push it for a good conversion rate because they're making money off that too. So they're going to try and make every little cent they can. And if that means pushing price down through a pivot level and ignoring it, they will. Any meeting. Let's see what else. This one's going to get into a little borderline. This is talking about cheating, and I covered it with Lois a little bit. Do you always wait for VC to reach 8, -8, if 3 other reasons line up, and the same for the center of gravity? If you're new to trading access, stick to the rules. Yes. I could say the only time you wouldn't is during the Asia session and when Aussie opens. You could. I'm going to keep it simple this way. You could probably use 6, but you still want it to be overbought, oversold. The center of gravity eventually. Some of the people that have been in the room for 2-3 years, they don't use the center of gravity anymore. Reason being is you can see the patterns forming of what you want and what you don't want. The center of gravity, though, for people learning, is a great tool to keep you out of no man's land right here, because typically you're not going to see a lot of good setups here until your price action skills develop. It'll keep you out of them. For me, I keep it on there for screenshots for y'all, and the other reason I keep it is, and let's see if we can find it. See how it's evenly spaced? Even though this is ugly and trending up, it's evenly spaced across. If you ever see the center of gravity where it's distorted, like it looks like it has somebody's hand around it and they're squeezing it shut, like this one's starting to distort. Even though the market doesn't look funky, it looks just kind of flat, I would stay out of that because it means the center of gravity is having a hard time. Its formula is having a hard time drawing to match the market. So that, for me, is a warning to stay out. There's just something going on that it doesn't like. Next one is the daily open considered a reason to trade. The daily open, I would consider it an institutional level, which institutional levels are your Murray math lines, your pivots, your daily fibos, your round numbers, and your daily open. All of those are strong reasons. Remember though, some in the room, I forgot who it was. Who was it? God, I'm so bad with names. Okay, well, someone in the room did a cute, nice little word spreadsheet that showed reasons. If you saved that or anything, yeah, it's a good thing, but remember to always keep it within the context of what the chart's doing. If you get, like right here, we have 61.8, and let's say these all 3 lined up, just because they line up and you're in a trend, you don't want to take them, you want to ignore. Remember, we're looking for ranging levels, not trending. And last question is, when does one overtrade? To be honest, if the system's giving you quality setups and you're taking them and you're doing well, you're not overtrading. If you're losing consistently, then you need to do one of 2 things. Stop. Either the markets are not working with you, and you need to be able to recognize market conditions. Pre-trading prep should help you out with that. I did that video. I was going to do that this week, but we have charts to look at, so I decided not to. Last week's pre-trading prep's on the forum, so go check that out. Pre-trading prep will help keep you out of crappy markets. But you're overtrading really with a rules-based system. If you're following the rules and doing well, you don't overtrade. You could trade literally 24 hours a day. That's something that Lois asked too, of how much screen time. Your screen time depends on your focus time. I can look at a chart for about 2 hours and I start losing focus. I will say that top of the hour alert, if that's a good time to get up for 10 minutes and go walk around, take a break, get your eyes off the charts. So if you're not using it for anything other than that, get up for 10 minutes, go walk around. Reason being is it'll help you, taking a break from the screens when you come back, it'll help you focus on them again. Because for me, I know when I catch myself watching YouTube while I should be trading or watching the charts, you've lost your focus. You're not gonna learn, and it's boring. If you're trading and you're having fun, yay! But staring at the charts is freaking boring. But it's how you get your screen time. You can watch, and what I recommend is look for setups that aren't overbought, oversold, or look for setups that are in the middle of the cog if there's nothing going on, and watch how price reacts. That's how you're going to develop into being able to not have to rely on value charts or rely on the center of gravity to keep you out. So you can do things that way, and that should keep you busy enough. Like right now, we're in the center right here. We're in this it's totally not a TA trade. But what do you see here? There's I would say a small support and resist here. Better would be up here, but there's a support and resist right here. And you should be able to spot things like that quick. So by paying attention to the chart until you lose focus, then get up and wander off. And if you come back and you still can't stay focused on it, then you're done for the day. Don't push it. You can't force screen time to be beneficial, because if you for me, my limit really is about 2 to 3 hours of focusing on the charts, and then I'm like, screw this, I'm done for the day. That's why you don't see me trading all day. Let's get to the charts. Let me find them. Okay, give me a sec. It's in my downloads, I believe. What in the hell did I do? Maybe it's my email still. That's not it. Oh, I know where it is. Give me a sec. The hell Skype go? I swear to God, I'm hating Skype even more and more. Mine keeps vanishing from my computer. But I'll see a message. Like, I can't find the icon anywhere. Okay. Got it. So we're going to take a look at a couple charts now that I found them. Hopefully this works, because I hadn't tested them out yet. First one's going to be, looks like AJ. This is the first time I'm looking at them, so... And feel free to put in your opinions on these, ask questions, whatever you want. Let me zoom out one on that. Okay, so this looks like it's TA 2.0. If I could get on the damn chart. Okay. From what I can see on the chart, it's zoomed in pretty close, but get a round number, and 1, 2, 3, 4 back. Overbought, oversold. RSI was weak. That would be an okay trade. I can't really see too much on the chart because it's zoomed in, but what I would say is it looks like it was doing an upward trend. You see how it was kind of riding the middle, and then it hit it, dropped, went. You did take it back with the trend, so ideally that's what you'd want to do. It was a well, these aren't actually round; they're prime numbers. They kind of got tossed because they're pretty weak. Prime numbers, if you're using 2.0, are kind of weak. Trade-wise, not too bad. Overbought, oversold. You're using RSI on it. We'll get into another one here in a sec. Let's close. Cog, VC, resistance, and one round number. Because this one looks like he used a little price action on it. Well, not price action, a support and resist. Okay, much better. I can see this one. It doesn't look like... Okay, it is marked. It's just my mouse was in the way. So you have resistance, pivot. Okay, so it was an R1 breach. And confluence-wise, you did have a prime number. Overbought, oversold, hit almost 10. That one ideally is good. Again, look at how it's doing it. You see how it's moving up, and then it drops down and then up. We don't really have a truly ranging market, but at least you didn't go the opposite of the trend. If you're going to try and trend trade, which I don't recommend, this one's more of a stair-step trend. You can see a pattern in it where it goes up, down, up, down, up, down, and then up a little and down a little bit. So all in all, if you can identify a stair-stepping pattern, then go for it, but never go against the trend. You can see here how value charts would hit and then hit again. Even it's just dumb. Don't go against the trend. This one was done properly if you were doing it. It's a stair-stepping trend. I would consider this probably a light trend. and you took the trade back with the way the trend was moving. So, not bad at all. But don't go against the trend. Next one, AUD USD. Waterfall, you caught the end of it. You were lucky. That's as simple as I'll put it. Look at the candles. Up, up. Our first warning, look at value charts. It was spiking. And I know the center of gravity redraws itself. But it almost hit 8 here. Then it hit 8, and then it had a divergence. Doji and a spike up. I personally would have stayed out of that. Waterfall, you were lucky you caught an exhaustion, and I bet if I could zoom out on it, there was probably a good support and resist or a previous swing high on a higher time frame to the left. That's the ones you want to avoid, because sometimes those will go 7, 8 candles in a row. And then if you lose your cool and start revenge trading them, you're screwed. Shit, I forgot to heat up my coffee. Next one, that was... what was that? AUD USD. This one's cable. Okay, so this one, it's an expanding range, and it's actually not a bad. I know that you're going to say, well, that's a huge candle. But if we look, the range was getting bigger each move. For me, not too bad. It breached the Bollinger Bands. Daily low got pushed. So that means that back here somewhere you can't see it, but that means that it was the first time since here that it had hit a previous swing low, and there was a pullback on it. Now, if the candle would have closed all the way down here, I probably would have stayed out of it. But because we got a pullback on it when it hit these levels, that one wasn't too bad. I'll explain more next week when we do a little pre-trade prep. I'm going to focus on ICHI a little more next week on why how it closes is important when it breaches a swing high or swing low. That one's not bad at all, though. I mean, Confluence, RSI, you were there. So, and again, I don't see it too much as a spike is because I can see the range expanding. From here to here was one size. From here to here it got bigger. Here to here it got bigger. US CAD. I don't even want to see this one. Okay, so US CAD is the devil's pair. I don't trade it. Reason being is it likes to go overbought, oversold for an extended period of time, meaning it'll push 1 or 2 candles past. It's my lowest performing pair. If you do good with it, stick to it. I don't. I suck balls at it. Pivot level, which is an extremely good reason for a trade, plus we had a prime. Overbought, oversold. It's a funky range, but it's a range. It goes up, and it came back down. So it went from the bottom of the cog to the top of the cog to the bottom of the cog. That one wasn't bad at all. We finally got a loss. I know you probably didn't think that's a good thing, but I think you... And page not found. I guess you didn't want us to see it. Let me double check it. Well. So that one's a page not found, so you don't get to see his loss. Let me try another loss real quick. EURAUD. See if that comes up. Come on. This was a ICHI trade. I'm going to cover ICHI trades just because, since I'm teaching them, I might as well. Okay, so the candle you took was too late. This would have been the entry candle, and you wouldn't have gotten into it because there's no confluence. You have one here, but no other reason. So you shouldn't have taken this trade. This candle here was already past the point, and here's our support levels. Now, if you move these support levels up to around the purple line and it breached, we would have had 2 reasons to take that trade, but we didn't. So this was our entry candle here. This count back 3. That's our entry candle. The first thing you do is the green cloud. Yes, we had a green cloud. Your black line, which is Mr. Krabs, was flattening out, which is good. But price below it, our entry would be below it, but where's the second reason to take it? There isn't one there, so that you shouldn't have taken that trade at all, and these would have never came into play then. Any questions on that? That's not a TA trade. It's an ICHI trade. So any questions on why that trade should have never been taken? try to drink cold coffee. Y'all should ask something. Okay. Gold. Let's take a look at that. Not there. I got a OTM on UJ. Let's take a look at that one. Okay, so this one's newer. We got... I like this so much more. Okay, we got Murray Math. So first thing, overbought, oversold. Yes. Center of gravity, yes. Next, let's go into institutional reasons. We have one, which is our Murray Math line. Current market conditions, it's breaching the 100 almost down to here. Looks like it hit daily low. It would have taken that into account. Support and resist barely. Okay, so not a bad trade, but the only thing I can say on it is I would have looked for maybe a little more confluence. Remember, I try and stick... That would be a 1% trade for me, but I wouldn't have taken it. I would have taken it towards the top. What's the center of gravity showing us is the price is coming down. So you want to go with the trend on a 1% trade with light confluence. Now, if you can get a light trend like this and you can stack 2 or 3 reasons together, plus some current market conditions, then yeah, I would take that, but it would still be a 1%er. If it was ranging, which this one's almost ranging, so I mean, I can see why you definitely took it. For me, it was just light on confluence. This would have been a 1% trade. Wasn't a bad trade, really. It's just a light confluence 1% trade. What I would do, and I was discussing this in the other room, so what do you do when you lose a trade? A 1% weak one like this, you write down UJ on a piece of paper, 1%. The next time you trade UJ, if a 1% trade pops up again, you pass on it. You wait for a 3% or a 5% trade to pop up. What's a 3% or a 5% trade? It means that you have more confluence on it. If you can pop a 5% trade on this the next time, once you get the hang of it, and I am not recommending it to anyone, but once they get the hang of it, you may be able to recoup your losses. I'm not going to say martingale. I call it turtle trading because you're doing it responsibly. You're letting the statistics work for you. There's nothing wrong with taking a 1% trade on weak confluence. A lot of times those will pay off for you, but just be prepared if you're taking a weak confluence trade that you're dropping your stakes first to 1%. Then maybe the next, you write it down on a piece of paper, like I said, and wait till the next trade. Look for a 3 or 5%, and if you get another 1%, pass. It'll help you out with the money management. It might make trading boring, but it'll help you out with the money management. Next one. We got a couple ICHIs. I'm going to go over those. Let's see. I'm going to look for a couple losses. Let's see. I haven't checked if we had questions yet. Okay, this one for me, not enough of a trend. The cloud was dying off. We had red and then green, but just looking at it, market's moving down, then up, then down. It's a range. So for me, it would have been a no because it looks like a range to me. Let's take a look at the trade. So you entered on this candle. This time we did have an M15 and a support, and it failed. Okay, so what happens typically when the market is ranging? You'll see that the K line does not hold at all. It just moves back and forth through it. If you'll notice when the market's ranging and you have your ICHI alerts turned on, K will pop over and over and over again on the same damn chart. It's a pretty good indication then that that chart is ranging. Reason why? Okay, so first, ranging for me, no trade, ICHI. But trade-wise, good trade if it was trending. You did get your breach. You would take your entry below the K line, and it looks like you had a support and a 15-minute. So that's excellent confluence. That's the type of trade you want to look at. Just focus on it being more of a green cloud moving upwards and not a ranging market. That'll help you keep out of those types of trades. If you have questions, do exactly what he did. This is for anyone that's listening. You can send me your freaking ICHI charts. ICHI's going to keep you from being bored with your thumb up your ass on a trending day, so send me the damn charts and I'll look them over. Let's see. Which one are we looking at? EUR, USD, CHF. We have one more. This was an OTM. I'm focusing mainly on the OTMs because his ITMs all look freaking great. I don't really have too much to say about him. That's a page no found. Let's take a look at one more. This one would have been a difficult one, actually. Okay, so first thing we look at, you did get the red cloud. It breached here and you passed on, or it touched it here and you passed on it, so you did wait for confluence at least this time. This is USD CHF. Okay, you used an M5 resistance. I personally would remove M5 off the chart. I know it'll give you more setups, but when I had M5 on there, unless you can see it really holding steady, I would remove it off there or have it on there. Just keep in mind that the M5 isn't the strongest support and resist. By the rules, yes, you did that trade correct. You went through K, you took it hopefully above it, and it hit a second line of confluence. So that was the correct way to do it. Personally, I've had the 5-minute fail on me too much, so I don't use it. I leave it on there, but I prefer to use the 15 and above and then draw my support and resist off Chico span, the white line, Casper. And that pretty much sums up those. All in all, this is a newer person using it. They did very well. Their ITM charts were very well done. I didn't really see too much cheating. Can you keep sending me some trades? Because I'm not really spotting bad habits, and everyone has them. So you know who you are, because we're looking at your charts. But keep sending me some, because I'm not, how'd you say it, I don't really have a feel for how you're trading yet. I'd like to get a feel for how you trade, so that I can say, well, I think this is what your weaknesses are. From those charts, either you're doing very well, let's put it that way, but there's got to be, everyone has their own little weakness that they fall into. So far, from the ones you lost, it was just, it looks like not recognizing a trend. The ICHI one was just not following the rule, but you're learning, so don't get upset or your titty's in a twizzle over that. You did very well. Other than that, any questions or anything? Because I need hot coffee, not cold coffee. It's driving me nuts. And next week, then, we'll do pre-trade prep, unless I have more charts, and then I'll schedule 2 for the week. But if I have more charts, I'm going to cover charts first, and then we'll do pre-trade prep. We're going to cover ICHI and pre-trade prep a little bit more so we can combine the 2 of them. But any other questions or anything like that? AJ. Maybe we'll have some. Now it's the end of the hour. So AJ, this is here. Let's take a look. See, this was end of hour where I wouldn't have taken it. No daily open right here. Here's the K line, and this was the next candle. So this would have been an ICHI trade except for that. So I stayed out. Even on trading axis, look, we had, here, let me do the background. And this is kind of why I stay out. Properties, colors. It's going to flip in 1 minute, but fuck it. Let's do it now. Okay, so here was our end of the hour candle that I say avoid. You son of a bitch. Every ticket's going to do it. Stop. Give me a sec. Indicator list. We just remove it. Delete. Hellos. Now let's change the freaking color back. And now it would have changed anyway because it's 9:05. End of hour candle. That's when the alert went off, so you wouldn't have traded this one even though it was a perfect setup for ICHI. On the TA side of things, it had one solid reason. So on the TA, it would have been a maybe. But if you would have looked at this and then combined it with ICHI, you would have said, I would have jumped in it because here's my open, here's the K line, but my red screen would have saved my ass. So I mean, it will ignore levels. Statistically, you'll see the spikes that ignore everything towards the end of the hour. So that's why it's there. And I hope that answers that question again for whoever had it. Any other questions, guys? Because I'm going to go get some hot coffee now. All right, cool. Enjoy, have fun, do whatever. Hit me up with questions, send me your charts.